Welcome to the show, everybody. So today we have a very special guest, and his name is Peter Krauth. Peter is the author of The Great Silver Bull, Crush Inflation and Profit as the Dollar Dies, a book that was released, I believe, a couple of years ago. As well, he is the founder and publisher of the newsletter, The Silver Stock Investor, which is a paid newsletter. But Peter also offers a free newsletter called The Silver Advisor that you can find online also. Welcome to the show, Peter.
Well, Robin, thanks so much for having me. I'm happy to be here and excited for our talk.
Yeah, and silver's always been of interest to me, Peter. I think it's the accessible metal. Gold is just shot through the roof in price. Years ago, here's a story. I was thinking, what do I gift the many young kids in the family? Right? It was Christmas. I forget the year, and I thought, they've got way too many plastic toys. So I located a precious metals dealer downtown Toronto, and I bought a bunch of silver coins. And so here comes Christmas. I gift these silver coins in envelopes to little kids, and the kid just kind of looked at me thinking, what the hell is wrong with our strange uncle giving us silver coins? What am I going to do with this? I can't buy anything at Toys R Us. And I explained to them, they were very young at the time, and hopefully they'll have this lesson soak in that, hey, you know what, like that $20 bill in your pocket, might not buy a Chipotle meal in 10 years' time. Like it could be upwards of $50. And just trying to explain the importance of understanding inflation. It eats away at our money, and that something like silver, something like gold is actually a hedge. And it was historically, and we'll get into this on the podcast, the currency. And now we have this whole fiat currency, and their eyes were rolling. But I thought it was important to impart that lesson on them. So, Peter, a segue to my first question to you is: how did you get the silver bug? How did you first become interested?
Well, I've got to say, honestly, and before I go there, I want to say I hope that your nieces and nephews are kept their silver coins and that they listen to Uncle Robin because he knows what he's talking about. And you're right. I mean, that it has been money for 5,000 years, and I think we'll get into that if you want after, but it's true money. And so, anyways, the way I got into it, I'm gonna say probably my first the way it first sort of marked me the first time was back in 1980 when it went to $50, and I was still pretty young and didn't pay that much in high school, didn't pay that much attention to it, but kind of remember that spike, and it being talked about. And then I think a few years later again, it ended up sort of spiking again at a much lower level, but still, the whole talk of it came up, and kind of forgot about it until I'm going to say maybe about 20 or so years ago, and sort of in the early 2000s, some of the research I was doing just for myself started talking about the potential, and that we were probably at the beginning of a commodities boom. And for different reasons, back then it was really all about China. Mm-hmm. And that kind of got me back into the resources and the gold and silver side of things. And then ultimately I ended up in the late 2000s working for a company, a publisher, a financial publisher, and had the opportunity to start a newsletter, a resource newsletter, and that was my focus, was the precious metals. I was covering, energy and base metals as well, but my focus and my preference was always on the precious metals side. So that was really my intro to this space. That's kind of how it unfolded for me.
That's really interesting. Yeah, so that spike in 1980, I believe, was that driven by the Hunt brothers cornering the market? I don't know a lot, but can you tell that story to the viewers?
Yeah, so it certainly was. It had a lot to do with it. There's no question about it. And so the Hunt brothers were a couple of guys who ended up sort of inheriting billions from their dad, H.L. Hunt. This was in 1974, so the timing is interesting because it's right in the middle of the 70s. And if anybody follows what's gone on in precious metals, our best comparison for a precious metals bull market is the 1970s. And I'm going to say this, I don't want to take too much time for it, but it's really good and I think valuable to know and consider this. In the 1970s, like I have all these charts, I've spent all this time looking at this, and without considering inflation, the S&P and the Dow were flat for 10 years. Like, I mean, went absolutely nowhere. And I'm not even taking into account the effect of inflation. So for 10 years, you made zero money in the S&P or the Dow. You were up 1,400% in gold, and I think something like 3,700% in silver. It was just phenomenal. And, you know, everything is a multiple of what it was back then. You know, that's 50 years ago. And so you can imagine, I can imagine at least the kind of drivers and pressure that builds up for a new, true precious metals bull market. And so, anyways, all that to say that this, event with the Hunt brothers in the early 70s or mid 70s was right in the smack in the middle of that, 1974. So they inherit these billions of dollars from their dad, who was running, I believe it was an oil company. And so they took this inheritance, they plowed it into the commodities market, and they were very interested in silver, and they were starting to buy up a lot of physical silver. And then eventually they decided that, well, the physical silver wasn't enough, and that they wanted to get into futures contracts for silver, which is kind of like a call on silver. Mm-hmm. So you can control a lot of silver ounces by putting down a small amount. And unfortunately, over time, they, I would say, got greedy, and they really did try to corner the market, and they were leveraging more and more of their wealth to do this. They were going out and approaching, in particular, Saudi investors, getting them interested in it. And ultimately, the regulators didn't like what was going on. Yeah. They saw these shenanigans, so to speak. And eventually, the way that this unwound was that they changed the rules. And they said you had to have more, you'd had to have put up more money to control the same amount of silver in the futures contract. And this was something that, and I'm simplifying, but it kind of happened overnight. It's called the Silver Rule 7. And it really drastically limited the purchase of commodities on margin. And so it caused the silver price to fall pretty quickly. And it fell like by half, I think, in a matter of 4 days. They couldn't meet their obligations anymore. And then the brokerage firms that were involved in some of this, there was talk that they could fail. So really, it just kind of unwound itself, and it was because the rules were changed on them, really, in many ways. And so that kind of fell apart, and it would peaked at $50. Was it the only reason? I have to say, I don't think so either. If you look at how silver behaves in bull markets, it actually outperforms gold in virtually every single bull market, whether it's kind of a sort of shorter term market or a more long drawn out market. It outperforms gold. It does so typically later in later stages of that bull market for different reasons. Yep. But and we were there. That was what was going on in the 1970s. So yep. I think what the Hunt brothers did exacerbated it, but I would certainly not say it was the whole reason why we had this mega spike in mania.
They cornered the market at the right time, because the 70s was rampant inflation, similar to what we saw, as you said, here, with upwards of, I think, 10% inflation. And a spike happened again, as you alluded to, with the commodity boom. But following that was, again, the debasement of the dollar, because the Federal Reserve started printing dollars left and right after the financial crisis. Gold and silver shot up again, I believe, to $50 US per ounce once again. And then now we find ourselves in 2025 at silver around, I think it's around $33 per ounce. It's had quite a nice run. I think when I gifted those coins to my family members as little kids, I think it was around $15 US per ounce. And so it's more than doubled. The same cannot be said about the Canadian dollar. Not even close, especially when you compare it against the USD. Now, history is so important, right? As you said, and let's get into that. I did some Wikipedia learning to study up on this podcast, that I can say I learned something new about the Roman Empire using the silver coin. I believe they call it the denarius.
That's right.
And the denarius was the most used coinage throughout the empire. And then the denarius then became denaro, which means money. And I was just totally intrigued by that. Yep. But even then in the Roman Empire, that silver coin they started adding less and less and less silver over time. So they debased the silver in the coin, and then eventually that denarius coin was basically made out of bronze. And I thought, oh my goodness, that's what's happening now to fiat currency. So can you tell us more about the history?
Yeah, absolutely. I mean, you're spot on. That's exactly what happened. So they were the original debasers or printers, so to speak, where they would try and fool everyone, and a lot of people were not fooled, and that's where there's this forget there's a term that you coined that explains this phenomenon, but it's basically, to summarize it, is that bad money chases out good money, and so when they did this, let's say the older coins that were 100% silver,
Yep.
or mostly silver, let's say, were actually drawn out of circulation. People would stop using them, and they were smart because they realized that, why am I going to trade this with someone when other people are taking these cheaper new coins? I'm going to hang on to these. So yeah, I mean, that's basically what that is. But with silver, what's interesting is that we know it's been part of daily life.
Yeah.
For about 5,000 years.
Wow.
Many people think that silver, because it's got a lower value per unit. In other words, let's say an ounce of silver obviously is a lot cheaper, has a lot lower value than an ounce of gold. Because of this lower value per unit, has been used more in daily transactions. If you think about going to the grocery store, or buying whatever, some clothing, that kind of thing, trading for a bit of food, whatever, that it has represented more transactions, more value in transactions over history because for that reason. So, and really, if you look back on history, it's been used by every major empire. The ancient Greeks were the first ones, and this goes all the way up till 20th century America, and it's only been about 50 years now that in the late 60s, early 70s, that the US started to take silver completely out of their coinage. So it's really been part of every major empire going back all that way. We know that about 2,000 years BC in Babylonia, it was in Mesopotamia, which is today Iraq, a part of Iraq, that they had this sophisticated system of like credit and money. They were using barley, and they were using silver sort of interchangeably, and there was what they called at the time a shekel. So 180 grains of barley equaled in an equal amount of silver was sort of the way that they used them interchangeably, so to speak. And then about 800 years BC, the Greeks made the first real silver coins, and that eventually morphed into what they called the Athenian drachma. And the drachma was really the world's first international currency. And you had Alexander the Great around 300 BC, who started, conquering lands, from Greece outwards. And these different places were accepting the coins. And then you really started to have different places around the world trading with each other, and using this Athenian drachma as the basis for trade. And so that was the first. So silver really was the first true international currency. So it's really quite impressive if you think about the history of silver that way.
That's so interesting, and I love how you chronicle all that history in your book. I think you also have a photo of an old U.S. I think $1 certificate, and right up until 1970, you could hand it in, and in exchange, you can get silver back, right, for that exchange. That is unreal. So currency was backed by silver up until not too long ago.
Absolutely. And that's what I tell people. I want them to know and realize that what we're living through now is really an anomaly. It's not normal for us to not have somehow precious metals, somehow backing our currency. It is absolutely not normal. And like I said, for thousands of years, up until almost continuously, up until about 50 years ago, that was still the case, even in the world's largest economy in the US. So, people, I think, should think about that and look at that. And you don't have to go into the nitty gritty of it, but realize it and appreciate it, and start asking yourself, why is that? And if you look at what happened since 1971, when Nixon closed the gold window, so to speak, and made the US dollar no longer interchangeable, because prior to that, you could have sovereign nations, other nations that held U.S. dollars. They could go to the U.S. and say, I have, whatever, $50 million. I want the gold in
Yeah.
exchange. And they were exchanging, they were giving them the gold in exchange. And then at one point, so there's this famous thing where it was, I forget his name, but the guy who was leading France at the time, he went to the States, or said to the States, we have X amount, we want to change it for gold, and sent their warships or whatever. And then after that, that was it. The Americans realized, oh boy, we do not have the means to keep this up. We're shutting it down, and that's when Nixon closed the gold window. And I mean, if you look at charts of the debasement of the dollar, 1971 is when, so to speak, the what hit the fan at that point, and then things just started to degrade very, very rapidly.
Fractional reserve banking, and people can look that up if they're not familiar. It's just also interesting because it's not taught in schools at all in the public school system, so it's very important to understand. Now, while silver and gold is not used for currency today, nor does it back our fiat currency, silver has so many applications in industry. And I think in your book you mentioned that while oil is number one, silver comes very close at number two. There's just so many applications and how it's used. Can you explain that for the users?
Absolutely.
The viewers?
Yeah, absolutely. So, I mean, I think that, what if we're going to talk about that, the first thing I really want to mention is solar, because I follow this closely, and solar has really, in the last, I'm going to say, maybe 10 years, become the driver that you want to watch on the industrial demand side of silver. So, unlike any other metal, silver really has dual purpose. It's about roughly half demand comes from some form of investment, and I include in that jewelry and silverware, and then in physical investment, people buying it, just to hold and as a hedge and so on. And then the other half of silver demand comes from industrial uses, where it's essentially consumed. So it goes into solar panels. It's truly indispensable in solar panels. About 20% of all industrial demand comes from solar for silver. Wow. So that is the single largest factor in silver demand on the industrial side.
It's the best conductor of energy, I think, right?
That's right.
It's silver. I think slightly better than copper.
That's right. It's apparently the standard. So everything else is measured against silver.
Interesting.
It's the best electrical conductor, and it's the best heat conductor, and it has the highest reflectivity of all metals. It's also cheaper than gold. So if you're going to use something for these applications, it makes sense. So you've got solar that is like what I call the 800-pound gorilla on the industrial demand side. You find it in EVs. We can talk about the batteries. There's been some interesting developments there lately too. You find it in EV chargers. It's actually in the fuel rods for uranium for nuclear power plants. You have it in all kinds of medical applications. It's in things like cornea replacements. It's
antibacterial too, I believe. Is that right? Is that the reason?
That's why I believe they have it in the cornea replacements, because it's a biocide. It will kill bacteria without the bacteria ever adapting to it. So it's continuously effective. So it's used to keep water fresh. I've heard anecdotal stories of people, their families would drop a silver coin in a barrel of wine, and it would keep the wine fresh, for a season or for a year. It's used in water filtration. I mean, it's endless. They're like you said, after oil, it's the next most used commodity. It's really quite something.
And then, of course, there's exponential growth in EV vehicles. And I heard you mention, I forget where it was, but Samsung is investing now in the solid state EV battery, and that will require ever more silver. Is that right? Can you talk about the solid state battery?
Yeah, so there's some, I'm going to say, lack of detail around it, which I don't blame Samsung for. Yeah. But what they have said is that this solid state battery will have essentially almost double the range of what we have in the best batteries today, the lithium
Wow.
ion batteries.
Yeah.
So we're looking at 800 kilometers. And,
Wow.
I can only say personally, I don't own an EV, but if I could drive, say, something like, 700 kilometers, the equivalent of 6 or 7 or 8 hours, and not have that's like a full day's drive, and not have to worry about stopping somewhere to charge my vehicle. That to me is a game changer. Just
Oh
that
yeah.
alone is the game changer. Because the best ones now, you're going to only do half that distance. So if you're driving, say, Montreal, Toronto, kind of thing, you're going to have range anxiety. You're going to start thinking, well, geez, where am I going to stop? How long is it going to take me to charge it? Is there a charger available? All these
Yep.
kinds of things. Well, that battery does away with those concerns. By the way, it's a 9-minute full recharge, which is phenomenal.
9 minute.
Yes. So that's maybe slightly more than going to your local service station and
Yeah.
filling up with gas, right? So
Wow.
very, very palatable. And it has a 20-year life. So that's also probably double of the best, lithium ion batteries that we have right now. So, admittedly, Samsung is saying this is, because it's new and they don't have economies of scale, et cetera, et cetera. It's likely to end up more in sort of the higher end vehicles to start
To
with, more
start out.
luxury
Yep.
vehicles. We're still waiting for more news to come out about this, but it's definitely something that is out there to watch. They've talked about it. You can go on Samsung's own website and find information about it. What we don't know, and what I've seen so far in terms of estimates, is this is going to require silver, probably quite a bit of silver. And the best estimates I've seen is a big range. Samsung does not say, not from what I've seen, but the ranges I've seen are anywhere from about 100 grams to as much as a kilo of silver per vehicle, per
Wow.
EV for these batteries. So that would be a big, new demand source for silver as these batteries start to catch on. So that's absolutely something to watch.
That's so interesting, and basically all these applications which didn't exist during the Roman Empire, just currency. Like we're looking at maybe the next 10, 20 years where demand for silver is going to considerably outstrip the supply.
Yeah.
I think that's where we're going, and that's what you're saying. I even saw a TikTok video. I think where there's some guy, I forget where he was, which country it was, India. He was melting down all these recycled phones, and I believe because there's silver in every single phone too, every smartphone. And it's just incredible. I had no idea the utility of silver. Before we hopped on here, Peter, you also mentioned that as a result of the impending tariffs here from Trump, the Trump tariffs, there's a lot of silver moving from London to New York City. Can you tell us more about that?
Yeah, so this is a really interesting phenomenon. It started about 3 months ago, a little over 3 months. And in the lead up to the election, Trump was already talking potentially about tariffs and so on. And so we can see from the numbers already that often are just coming out monthly that traders were getting ahead of this. They saw the risk, of potentially having up to 25% tariffs on gold, on silver, and so on. And so they've been moving large, absolutely abnormal large amounts of metal, gold and silver, from London, which is where there are larger inventories, to New York, because technically these tariffs, if applied, would apply on metal that was being imported into the U.S. So they're trying to get ahead of that, moving the metal prior to that, and so we've seen the London inventories drain quite quickly. We've seen the New York inventories rise quite quickly. Actually, the Chinese inventories have gone up as well in the Shanghai exchange, futures exchange. So it's moved out of London into New York and into Shanghai, and it's really quite impressive. So you can own physical silver. You can also buy. We talked about the Hunt brothers with futures contracts, where you have a sort of a claim on silver, and for a small amount, sometimes it's a tenth or a hundredth of the value that you're controlling. You just have to put, a dollar or maybe $5 down to control $100 of the metal. So that's a lot of leverage. And normally these contracts are just used to either speculate or
Mm-hmm.
to hedge. So you might have, let's say, a large gold or silver producer, a miner, who obviously wants to protect against the price coming down. So
Mm-hmm.
they would be short futures contracts. So I don't want to get into the weeds of that, but all that to say that futures contracts are used for these reasons. And almost all of them, almost invariably, are settled in cash when they mature.
Mm-hmm.
But you technically have the ability to ask for delivery at maturity,
Mm-hmm.
and that's what we've been seeing happening.
Uh,
We've been seeing, you know, these futures contract holders say, no, 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 this time I want the physical stuff.
Physical
So,
movement of gold and silver that you
right.
haven't seen in a long time.
No,
Interesting.
it's
Yeah.
exactly. These are totally, you know, abnormal levels, and there's something called EFP, which is exchange for premium, and what that means is that you look at the difference between the price. Sorry, exchange for physical.
Mm-hmm.
So you have to look. You look at the difference between the price of the physical metal
Mm-hmm.
versus the price of the metal held or priced in the futures contract.
Mm-hmm.
It's usually very very close to the physical price, but the premiums have gone crazy lately. Like
Mm.
in China, they're like 10% over the physical price. Sorry, over the futures price. In fact, they're 10% over even the New York price in
Mm.
China. That's how badly they want physical. They make a lot of solar panels, and they're really really anxious to get enough material for their production of all sorts of industrial things. So this is very telling that the market is extremely tight, and it's very exciting to watch. It's certainly putting pressure. You know, people will ask why, and I've had this going back over the past year, especially, and a little bit longer. You know, if you've got so much demand and pressure for silver, why has the price not just exploded, right?
Yep.
And so you have to kind of understand a little bit about how it works. It doesn't explain everything, but I believe that this explains most of sort of the silver price behavior over the last few years, say 2, 3 years, or four
Mm-hmm.
years. So you've got demand for silver, and I'm going to use big sort of easy round numbers.
Yep.
So this is what's interesting. The demand for silver the last 4 or 5 years is about 1.2 billion ounces per year.
Mm-hmm.
The supply, which is about 85% comes from mining
Mm-hmm.
and about 15% comes from recycling, total is only about a billion ounces. So we've been short about 20% every year for the last 4 years, and we're expected to be short again about that amount this year.
Mm-hmm.
So, you know, observers, everyone's saying, well, how can you have a deficit go on like that year after year? And then on top of it, you know, the price is not exploding.
Yep.
Well, what has happened was you've had in these exchanges, so you've got the New York COMEX exchange, you've got the London LBMA, and then you've got the Shanghai Futures Exchange. These are the three big ones
Mm-hmm.
globally that have several billion ounces of silver just sitting there. Sometimes available for delivery. Some of it is held to back silver, physically backed silver ETFs. You know, it's there for different reasons, but we have these identifiable inventories where you can at any given point in time you can see how much there is,
Mm-hmm.
and it's a few billion ounces. And what we've seen happen is that as we've hit these deficits for the last 4 years, so I'm going to say starting in early 2021, we've seen the inventories go down in these
Mm.
three exchanges. So, you
Hmm.
know, when
So
I
that
look at that,
there's not as much being mined. There's a depletion now in the reserves,
exactly.
and then the demand is just
Right.
skyrocketing. Right, it's
But if you
growing.
think about the sort of the reasoning behind why this has not pressured the silver price higher,
Yeah.
if you think about it, it makes sense that, let's say we're talking about big industrial consumers, because they're the ones where it's not an option. You know, it's not like still a jewelry or investment or silverware. We say,
Yeah.
well, I'm not going to buy some this year or whatever. They need the stuff,
Yeah.
so they have been able to tap into these physical, what I call secondary inventories, and buy down, go out to buy, let's say, a futures contract, stand for delivery, say, I'm taking delivery when this matures, and do this day in, month out for the last several years, gradually draw down on these inventories and do it at prevailing silver prices without pressuring miners to come and bring more new silver to market. But this can only go on so long, right? Once these inventories get to sufficiently low level, critical levels, then there's this price discovery that will certainly put pressure on silver prices to make them move up. I think what we've seen happen in the past year, where silver I think it was almost exactly a year ago, late February, it bottomed around $22. We're now at $32, $33. I mean, that's a 50% gain,
Yep.
in the silver price. A lot of people are still not happy. I can bet you that a lot of miners are kind of getting happy with that. But the way they've behaved over the last, say, decade and a half, where they got a little too, let's say, loose with money in terms of acquisitions, all these kinds of things, they've become a lot more conservative. So I believe that many of them now want to see these new, higher, sustained prices for silver before they will start to bring new projects to market. And that's a whole other ball of wax we could talk about another time. But silver grades have gone down. Finding new, rich, large economic silver deposits has become more and more difficult. And so, there's research from, I believe it's S&P Global, that has said that they believe that silver mine supply peaked back in 2016 at a little over 900 million ounces. And we're not going to, they don't even know when we're ever going to see that bettered again. So, mine supply for silver is not looking rosy, which is very bullish for the price.
It's bullish for the price. And so you would not be surprised if you see silver price per ounce at $50 USD this year. What do you 2025?
I
You
mean,
wouldn't be surprised.
I'm actually expecting that in the first half of this year, we're going to potentially see 35, which we saw, I think it was like late October last year. It kind of spiked a little bit and then corrected. I think we're going to see that probably challenged again, but in the next quarter or two. And I think that conservatively in the second half of this year, we could see $40. But if anybody out there follows technical analysis, which is looking at charts and prices and so on, many consider silver to be the biggest, to be forming what we call the biggest technical price breakout of all time of any asset.
Oh, this is exciting, Peter. Okay.
So, I'm going to break that down a little bit.
Sure.
What that means is, if you look at the price, behavior. So I'm going to do this backwards. Is this your left side as you were talking?
Yep, that's good for me. Yeah.
I'm going to do it backwards.
Sure.
So the price peaked at $50 in 1980.
Yep.
And when you look at charts, there's this thing called technical analysis that looks at shapes of the chart. And there's a formation called cup and handle.
Yep.
And the cup and handle goes like that, and so that's the cup, and then you've got the handle, which is another sort of little U-shaped thing on the end. So 1980 was $50, and you had this long bottom up until 2011, when it spiked again to 49, almost $50 in April of 2011. So that was the end of the cup. Ever since then, we've had the handle form, and if we get, I was just checking earlier today, so you can look at this in different ways, but if you look at just the price that the metal closed at each year since 1980, in 2011, although it spiked to 49, it closed at $33 and change that year. If we close 2025 somewhere above $33, then we will have the completion of that handle formation, and then we're in uncharted waters. I mean, there's technically no upside for the price. The obvious targets are things like $50, which is where it peaked at previously. I think that's very likely, in a matter of about a year and a half, maybe 2 years. And then, people who are very, very much what I would call insiders and highly informed in silver, silver's behavior, silver mining, silver pricing, trading, silver trading, believe that triple digit silver is a matter of time. So that would mean $100. And frankly, although I now sound less crazy than I did 3 years ago when I was said this in my book, I believe that the spike ultimately at the end of the mania for silver, which could be 5, 6, 7 years away, that silver could reach like $300.
Wow.
Yeah.
I've seen him make that big bold prediction, 300.
Yeah.
And yeah, if silver can finally breach the $50 per ounce and exceed that, you're like silver's going to be introduced to so many new investors that have never looked at owning silver ever as an investment and think, what is going on? FOMO will kick in for a lot of people. And we'll see if it gets there. How did you get to the 300 bold prediction, and when do you think we'll get there for silver?
So the 300, it's funny because when I started sort of doing the research and analyzing and trying to come up with looking at how silver had behaved in the past, and then what might happen going forward. So you have to make assumptions. There's no way around it. And so one of my assumptions had been that ultimately we would reach, say, $5,000 gold. That sounded crazy to people a few years ago.
Not so far off anymore.
Thank you. Appreciate you saying that because, already at 2,500, we were halfway. When I was telling people 10 or 12 years ago, something like $2,000 silver, they'd look at me thinking, you're out of your mind. Sorry, not silver, gold. $2,000 gold, they said you're out of your mind. And now it's widely accepted. Nobody even seems to be excited by it. We're at $2,900 today. No one's even that excited about it. That tells me there's a long, long, long way for gold to go still. So in the book, my conservative prediction or forecast for gold is $5,000 gold. So there's different metrics you can look at in terms of how silver behaved relative to other assets. And so and that's how
interesting. So there's almost like a ratio then, right?
Exactly.
Gold and silver.
Exactly. So you've got a gold silver ratio, you've got a Dow silver ratio, you've got average US home price to silver ratio. So all these kinds of things can give you an idea of where silver will go.
I would assume then that with the gold silver ratio, with gold having such price appreciation, silver probably is undervalued in relation, right?
It's
accordingly.
Undervalued. I mean, the gold silver ratio right now is right around 90. If you look at, it takes you 90 ounces of silver to buy 1 gold ounce. That's really what it is. If you look at how that ratio has behaved over the last, say, 30, 40 years, it's averaged actually closer to about 55 or 60, which means that silver has quite a ways to go to catch up to gold. When it bottomed in 1980, when silver went to $50, gold was about $850. So that ratio roughly bottomed at 15. So that meant on that day, let's say, that peak, it took only 15 ounces of silver to buy 1 gold ounce. So that's one example. In the book, I talk about that and I lay it out. So I showed that if you go by my forecast, say $5,000 gold, if the ratio drops to 15 to 1 on $5,000 gold, you're at $333 silver.
Easily, yeah.
My how can I put it? My, I guess, real forecast for gold today is more like 10,000 ultimately. And if I use, let's say that happens and I use a less aggressive ratio bottom of, say, 30, you still have at $10,000 gold, you still have $333 silver. And so I go through these different ratios, the Dow to silver, I look at the US home price to silver. I think it bottomed, the average US home price to the price of silver in 1980 was something like 1,400 ounces. So it took you 1,400 ounces of silver to buy the average US home at the time. I think it was 10 times that at the peak in like 2000 when silver was at its bottom and home prices had risen considerably. I think that if you look, what I did was I looked at, let's say, 2, 3 years ago when I, published the book, the average U.S. home price was close to 500,000, and if you took the bottom ratio in 1980, you were again at around $300 silver. So what I found interesting is that I'm there, geez, all of these things are pointing to somewhere close to 300, 333, 320, 280. For me, I said, predictions are predictions, forecasts. It's ridiculous to, be super specific. 300 is close enough. And so that's basically how I get to that kind of level, ultimately, potentially, in peak in silver.
That's really enlightening. And so that would be on the upside. On the downside, at what level do you find that most private silver investors say, I'm going to buy silver in bulk. I'm just going to back up the truck and buy as much as I can. Like, what is the support level
Right.
on silver?
Well, I hate to say it, but Robin, unfortunately, most people do not buy when it's cheap. They follow the crowd and they buy when it's expensive, and
Same
they
as in the stock market, right?
you
The
got
same
it.
pitfall.
You
Yeah.
got it. It's being contrarian, and it's very difficult.
Yeah.
But it's the contrarians that do the best. And
Yeah.
I like to say that patience is the rarest commodity.
Yeah.
People just sort of chase things, are not sort of willing to say, I'm going to do the research. I'm going to come up with my own conclusions. You have to have conviction, but if you do the proper research, I'm not saying bet everything on one asset. I'm just saying that there are certain assets. If you look at the economy and conditions and what the outlook is that certain things are much likely to do better than others going forward. I believe that commodities in general are part of that, and because of that, because of inflation and all these kinds of things, I believe that commodities should actually probably replace someone's bond allocation, frankly, so-called, traditional 60/40 portfolio.
Bonds were just crushed recently, right?
Absolutely.
Like so
Yeah.
many,
The
so
outlook
many
is
people.
awful
Yeah.
for bonds.
Yeah.
And if anything, I would say hold cash or hold, sort of money market, short term
Yeah.
treasuries, that kind of thing. But anything beyond a year, I would totally avoid. So, all of that being said, the outlook for precious metals, and I was saying about people not being patient, if you do your research and you have conviction,
Hmm.
then you place your bets and you do it, I'm going to say wisely. Don't bet the farm on one asset, but I think that commodities and precious metals in particular have an absolute necessary place in everyone's portfolio. You have to decide in which way. Is it the physical? Is it the mining stocks? Depending on your own risk tolerance, you have to know yourself. But I do believe everybody, to some degree, must have some of that in their portfolio, and then you have to sit back and you have to constantly reevaluate. Ask yourself questions. Watch what's going on. Say, has my thesis changed? Has something taken place that changes my mind about my outlook? What am I wrong now? Should I change my allocation or whatever? And if the answer is no, then you have to either sit tight and be patient, or maybe even add. And if things have gone down, maybe you can do it in increments, but you can add, and maybe you're averaging down a little bit.
Yeah.
So these are things you can do sort of cautiously, but there's ways to do it. And I talk about that in the book. In fact, people have said to me, one of the things that we appreciate is that you weren't shy about, at the end of the book, saying how and when to sell, because people think that, it's just sort of this rah thing, buy, and I'm saying no. Ultimately, we're going to get to a point where we're going to have a blow off top. It's going to look like it probably did at the end of the 70s, and you're going to want to know when to sell. Conditions will change. I'm not saying you're going to sell absolutely everything, but chances are you're going to want to sell the bulk of your silver, gold, potential mining investments, and so on that will leverage those metals, and to look for the signposts that tell you, hey, it's getting really lofty here. You may want to at least sort of sell on a gradual basis and
Interesting.
take profits.
Yeah, and it's absolutely a good and effective hedge, right? Gold and silver.
Sure.
There's no doubt. A story from my own life. I met a guy. He's a friend now from Colombia. He told me that when he was in Colombia and working, as soon as he got his paycheck every 2 weeks, paid in the local peso, whatever you call it, he converted that immediately to USD. And so we just don't realize how bad inflation can get because we live in Canada. It's been bad recently, but that was an eye opener. And he told me that story 10 years ago. I was like, seriously, you convert immediately,
Yeah.
like 100% of your paycheck and used to. He's like, yep, that's the
Yeah.
safest
I
thing to
mean,
do.
for sure. I mean, I don't know how closely maybe your viewers follow what's been going on in Argentina, but that I absolutely, if they're not aware,
Yeah.
I strongly recommend Google Argentina news and see what's been going on. It's just sort of phenomenal.
Yep.
The rebirth, in a sense, of that country. As
Yep.
long as this new president is allowed, sort of, quote unquote, allowed to continue doing what he's doing, they could become surprisingly a model for most of the rest of the world. But what I wanted to say, which relates to your point about Colombia,
Yeah.
until maybe a year or 2 years ago, they wouldn't even bother putting prices on things in Argentina. The prices would change so fast. People would get their pay
Yep.
and literally run to the store and
Yep.
spend it as quickly as they could, because if you waited an extra hour, you got that much less for your pay. It's just mind blowing. And this is happening today in,
Yep.
I'm not going to say third world countries, but they are less developed countries.
We've experienced it here in
Wow.
Canada the past three
For
years. It's
sure.
just it's crazy.
It is.
And yeah, and it almost seems like Musk has been influenced by what's happening in Argentina, just taking the axe now
Yep.
to the bureaucracy. I think they're paying out 75,000 federal workers just to walk off the job and end their service for the government, whatever they were doing. There's so many stories coming out. And so Musk has a deep understanding of that too, doesn't he? That has led to inflation itself.
Yep, and I'm glad you brought him up, because
Yeah.
something I talked about a year or so ago, or a little bit more. Well, actually, two things I'm going to say. One is that in the book, I talked about how it struck me how, and this is early 2022. I looked at, today we talk about the Magnificent Seven, but how quickly we forget back then it was the FANG stocks, right? So the big five tech stocks, so to speak. And I thought to myself, inflation was really starting to ramp up. And by mid 22, we were at like 9%. I think it was in July of 22 in the US. That's pretty crazy. And so I thought to myself, geez, I could see how some of these big public companies that have tons of cash on their balance sheet are going to start to get pressure from shareholders to do something with this cash, because think about it, overnight, like in a year, you're down 10% just on your cash. Well, Robin, I went and did the math. I looked at just those five companies. They had $500 billion of cash combined on their balance sheets. $500 billion of cash.
A fiat currency,
Sitting
right,
there.
was being debased. Yeah.
Thank you. Exactly. So in the book, I said I could see where at some point in the not too distant future, you're going to get pressure from shareholders on these public companies, on the stewards of these public companies, to start doing something with that cash. You cannot just leave it there. Either buy other companies, pay it out, pay more out as dividends, let the shareholders decide what to do with that cash. Invest in assets that are inflation protecting. So, sure enough, in December, I just came across this about a month ago. There was, I forget who the entity was. Actually, I can dig it up. I think
Yeah.
it's better if I can give you the true details. Give me just a quick second as I have this at my fingertips.
Absolutely. I'm actually talking to Mr. Ferrari, who's the founder and CEO of Good Food Market. He just
Oh yeah,
announced a few weeks ago that, yeah, his treasury balance sheet, they're going to convert, I think it's most of it or all of it, into Bitcoin
Oh my goodness!
for the
Wow.
very same reason. Yeah.
There you go. Well,
Yeah.
so this ties in perfectly to what I'm about to tell you. So here was my quote from 2022 in the book. I said, "Companies may one day be challenged by their shareholders for holding too much cash
Ooh.
as it loses purchasing power, hurting share values." So
Yeah.
that's in the book 2022. Like, I'm not making this up.
Yeah. You saw it.
The end. So this on December 6th, 2024. Amazon shareholder proposal. This is put forward Amazon and Microsoft, submitted by the National Center for Public Policy Research. Said so. This is for both Amazon and for Microsoft to consider Bitcoin as a treasury assessment. Now, there's all these, sort of, I don't want to go there, but people, who are Bitcoin proponents, precious metals proponents. My point is only that let's just say, let's view Bitcoin as hard money in the sense that it has a cap in terms of the number of coins that can be
Yeah.
produced. So let's consider that.
Importantly, it's a hedge against the
Exactly.
debasing of the fiat dollar.
So
Exactly.
what they said in their proposal, because they wanted Amazon and Microsoft to consider Bitcoin as a treasury asset. So their argument was, get this, during inflationary times, corporations have a fiduciary duty to maximize shareholder value, not only by working to increase profits, but also by working to protect those profits from debasement. There you go.
That you saw the writing on the wall. That was 2 or 3 years ago, and that's
Yeah.
just phenomenal.
Yeah.
It's just sadly how it's going, and it's only increasing in speed, right? That the
Exactly.
value of our dollar is declining. We see it in El Salvador. I believe the president, he's been buying Bitcoin for
That's
years
right.
now, right? For the same reason, and that country is turning around now. For viewers of the show who have never gone out to buy silver, I did it that one time. I don't know if that dealer is still around. How do you buy it? Where do you go, Peter? If someone's in the Toronto and GTA region, totally curious.
So it's not difficult at all. I mean,
Yeah.
really, you can Google a local bullion dealer, coin dealer. Definitely look for a high number of good reviews. That's sort of the first fast, easy filter to
Yeah.
make sure that overall people seem to like them. Read some of the reviews. Make sure that they treat their customers well, that they're fast, that they deliver quickly. If it's being shipped to you, that their pricing is good. All these kinds of things. Good sort of in-person customer service. You want all of that stuff. And besides that, you don't have to. You can go online. There are big reputable dealers. I'm not recommending anyone particular, but I
Mm-hmm.
will say a couple of names. There's in Toronto, there's Sprott Money.
Okay.
That's Sprott Money. They're
Eric
very
Sprott's
big.
been a gold bull like forever, hasn't
Absolutely,
he?
exactly. I mean, they sell a lot. I know
Yeah.
a lot of people have very good experience dealing with them. There's a large company out of Montreal called Kitco. Both of
I've heard
these
of Kitco.
companies,
Yep.
yep, you can buy from them online. Again, do your own research, compare prices. There's a company, I believe, out of Alberta called Gold Silver Bull.
Mm-hmm.
That's one you can look up as well. It's another bullion dealer. So these are just a few names. Again, I'm not pointing anyone to someone in
Yep.
particular. Go ahead, do your research, compare
Yep.
prices, compare, people's experiences with these places. And but you know what? I the first thing I'd say is don't wait. Even if all it is you're buying one single silver coin right now, go ahead and do it. Get that, get it in your hand. If you've never experienced having one of these things in your hand, I
Yeah.
think it's just I can't put it into
It's a piece
words.
of history,
It
right?
is.
This is how currency was made.
And the effort to get this stuff out of the ground and the beauty of a silver Canadian maple leaf, for example, that, by the way, the Canadian Mint were the first ones worldwide ever to produce what they call 0.999, so that's four nines, silver
Oh,
purity. Now, I
that's
think
pure. Yeah.
maybe a couple of others now do that, but so you're getting like almost absolutely nothing else in that coin except silver.
And they're still selling that coin.
Oh yeah. That's
Okay.
that's like their standard. Their standard product is the point 9999 silver. It's you look at how this thing is made, and you it's almost like a piece of art, really.
Yeah.
It's quite impressive. So that will get people, I think, sort of into a relationship maybe with
Yeah.
that metal, and then look at it. Maybe they'll buy a little bit more and get more comfortable with it. Oh, before I forget, you can buy this stuff at Costco now.
Oh,
So
really?
Costco and Walmart have become some of the biggest silver and gold retailers in North America. Costco last year, I think, did $1.2 billion of gold and silver only. They have some of the best prices out there. The one thing that they will not do is buy it back from you.
Hmm.
To me, that's not an obstacle. You can sell it back. I mean, their product is the absolute authentic
Oh,
thing.
wow.
Many times it comes like in a sealed packaging from a recognized mint. You don't have to worry about it. But there's another place that you can buy
Gold and silver from
gold and
Costco.
silver. Absolutely,
Is that only at the Costco location in the U.S. or also in Canada? Can you
I
buy?
believe both. Yeah,
Oh, that's, I'm going to make a local visit to the Costco here in Oakville.
yeah,
That's interesting.
yeah,
Is there more of a premium when you buy the coin because of the design effort that goes into it
yeah,
versus the
yeah.
bullion?
Sure.
Can you talk about that dynamic?
Definitely,
Yeah.
definitely. So for a few reasons. One is, a coin is a single ounce.
Yeah.
Usually, you can get some bigger ones, and you can get partial ounces, but the standard is a 1 ounce coin.
Yep.
And you can buy small bars. Let's say you compare either a small bar of silver that comes from a reputable or recognized refiner. These are the companies that are known globally to produce the stuff, versus a coin. Now, the
Yeah.
coins usually come from a sovereign mint, the mint of a specific country.
Okay, like Canada, for example, you gave.
Exactly. The
Yeah.
Canadian mint, you've got the U.S. mint, you have the Australian mint,
Hmm.
you have the Austrian mint, for example,
Hmm.
that's well known in Europe. You have Krugerrands in South Africa. So there are different versions all around the world. So yes, you do pay more
Yeah.
for a coin that comes from a recognized mint. That is my preference, I'll say honestly. And the reason is there are two reasons. One is that you will, if ever you want, first of all, you're going to get more back when you sell it
Hmm.
because it will retain that premium. In other words, anyone,
Okay.
unless there's some extraneous reason while you're selling it and you need the cash and you're willing to take less, if there's no pressure, someone will give you a reasonable price versus what you paid, because it will continue to retain that value of being more recognized.
Hmm.
And then the other part of it is the effort that it takes to make it. So, what they're doing is they're buying what they call blanks,
Hmm.
these rounds. It's just a round piece of silver that's the right size and shape from a refiner, and then the mint takes those and then they put them through a press. And then, but you've got all kinds of rejects. You've got all sorts of things, and so they make sure that everything is top notch and everything is up to standard. And so there's effort, there's distribution, there's all sorts of staff, there's security, there's all sorts of things around the production. There's design, everything. And so these are different reasons that you will pay more for a silver coin versus trying to buy it, in sort of maybe a larger bulk bar, for example. Like you could buy 100 ounce or a 10 ounce silver bar.
Yep.
It will not have. So obviously, there's more work in making more single ounces, but then you've got everything relating to the mint itself. So yeah,
Yeah.
that's
And
how you
there's the
justify the higher price.
collector's premium exactly of perhaps that mint in particular. So for someone who's stacking many coins over their lifetime, or stacking many bars, there's also the storage consideration and security because of theft, obviously. Are there storage facilities, services available? Okay.
Yeah.
Yeah.
So from what I know, both the two that I mentioned, Kitco and Sprott, offer that.
Okay.
There are some larger outfits. Now, they may use third parties, but I'm talking about companies like Brinks or Loomis. These are very big international, sort of security companies that will do the storage. So in that sense, there's no need for concern. These inventories are audited. if you're talking about, considerable amounts for a person to have invested that way in physical silver that they have in storage, the one thing that I would absolutely ask for
Hmm.
and insist on is what we call allocated storage. And
Okay.
what that means is that this silver or gold or whatever is held separately. It's not what we call commingled
Mm.
in a pile with a bunch of other clients. It's your own separate pile of silver
Yeah.
or gold. It's got a tag with your name on it. It gets audited. You can ask for your bar numbers.
Yeah.
You know that
And
is
you,
yours.
and you can go visit, I'm sure, easily, and
You
you can
can,
see
yeah. In
it.
many
Okay.
cases, that's
Audit it
exactly
yourself.
right.
Yeah.
Absolutely. Yeah, and you've got some of these companies that are larger will offer you storage options. In other words, they'll say, look, it's up to you. If you want some of your or all of your gold stored in New York or in Idaho or
Oh,
in Australia or in New Zealand or in Singapore, Hong Kong,
wow.
you can choose. You can choose. You can split it up. You can have all of it in one of these places. That's really up to you. But as I say, many of these places will give you all of those options as well.
That's really interesting. And so there's obviously you can accumulate the physical silver, but then what are the pros and cons of that versus someone who says, you know what, I just want to buy a silver ETF
Right.
and just not have to worry about it. So what are the pros and cons there, Peter?
Sure. So, if you're talking about a physically backed silver ETF, right? So, in other
Yeah.
words, not a mining ETF, right? Not a silver mining ETF. So this is what we call synthetic silver, let's say. So you have a claim on silver. So you're buying. It's like buying a stock,
Yeah.
except that it's like you're buying physical silver. Someone else is holding it for you, secured, and they're not all created equal. That's
Yeah.
what I will say. Here's where I will name names, and by far my preference is the Sprott Physical Silver ETF.
Sprott once again. I think he just celebrated his 80th birthday at the Ritz Carlton a
Yeah,
few months ago. Yeah. So
yeah,
good on him. He's going strong. Yeah.
absolutely, absolutely.
Cool.
The guy is really really something in the entire resource business, and just sort of standout company and standout person, and just very solid. So the Sprott Silver ETF, I've done some research and compared it to some of the other physically or so-called physically backed ETFs, and my comfort level is much higher with the Sprott one. Just when you
Mm.
look at the language in terms of how who holds the silver, what they're able or not able to do with the silver, all these kinds of things. My confidence level is much higher with the Sprott Silver ETF. That's what I'll say about it.
That's good to know. And then the next level, which is out of reach for most people, is what Robert Kiyosaki recently did and told you is that he bought his own silver mine, I think, in Argentina,
Right.
which is amazing. That's an incredible project, and he's
Yeah.
mining his own silver and storing it. How did that relationship come to be? Did he reach out to you? I'm totally curious.
So yeah. So what happened was I participate in different conferences every year, and last year there's one in Vancouver in January. I was actually there
Mm.
again recently. It's called the VRIC, Vancouver Resource Investment Conference. And so, as you said, Robert Kiyosaki is a very big silver bug,
Yeah.
and as it happened, we were both on a same panel, being asked questions about silver up on stage, and I happened to be lucky enough to sit next to him. And when the panel was over and we were getting off stage, I asked him. I said, "I know that you've got this podcast. Is there a chance to be on there and talk about my book and talk about silver and so on?" And so he said, "Absolutely, let's do it." So it took a few months. We got that done, and yeah, so managed to like that connect with him and be on his show. So that was certainly a highlight for me.
That's an incredible experience. He's
Yeah.
definitely a very interesting guy to know. So we've talked about owning pure silver in physical form, or as you said, ETF trust form. You also though cover silver mining companies. Can you walk us through how do you evaluate basically a silver mining company? How do you know that it's a reputable, it's a good company with good prospects to invest in?
Yeah, so that goes through a few steps. And
Mm.
I'm going to say this much. First, my paid newsletter is one that covers the entire silver space. So I do talk about things like silver ETFs, even silver mining ETFs. So an ETF that owns several silver companies.
Okay.
But the way the ETFs are built and some of the requirements, they're actually not just silver. They do have a lot of gold and maybe
Oh,
some
the
other metals.
diversified
So, yeah,
companies. Yeah.
so they're less silver pure, let's just say.
Okay.
So after that, then you've got sort of some large silver royalty companies, and then you have large silver producers. You have silver developers, so that's companies which have a larger project, and that they're working on bringing that into construction and eventually actually starting to mine. So those are the developers, and then after that you have the explorers. Some of those are the riskiest ones. Some of
Yeah.
them have an asset already, so they have a proven economic deposit in the ground. Let's say 50 or 100 million ounces of silver, and then below that you've got what we call pre-discovery, the absolute highest risk. Companies that have a property, in the best case, they know that silver has been mined there before, so obviously that helps a lot. But some don't even have that. So, it's certainly, like I say, much riskier. And of course, the payoff can be much bigger. So,
Hmm.
but we've seen, especially in the last little while, many of them risk discoveries have been very, very highly rewarded. And just it's funny. Just yesterday, I had one company that I recommended, and this doesn't happen all the time, to be honest. But I recommended it back in, I think it was end of November, and it doubled by the time we got to yesterday. So we're talking about it taking it about 2.5 months to double. They haven't even started drilling yet. All they've done, all they've done was talk about their exploration program, but there are a few reasons for it, and I'm not going to spend too much time on it. But one is, quality of management, quality of the asset, history of the asset, how the company is structured. There's not a lot of shares outstanding. It's
Yep.
very tightly held by a lot of insiders. All of these things make a difference, and these are all filters that I go through when I evaluate a company and decide, does it deserve to be in the portfolio or not. One of the other important things that I consider, and that's one of my first filters, is if a company is either producing silver or has a deposit that they're working towards, maybe bringing into production, is how much silver is actually there. Because
Hmm.
you'd be surprised, there are plenty of companies out there that I say are masquerading as silver companies when really they're more silver, they're more maybe lead or zinc or copper
Oh, geez.
companies. And they
Yeah.
have some silver, but what they do is they give you their numbers for the amount of metal they have, where they convert the other metals into silver equivalents. And then they say we have this much in silver equivalents. Well, it's not that hard to do the math and undo their calculations and see how much silver is actually there. And sometimes it's not more than 15 or 20% silver. And they still call themselves a silver company, which I think is awful. So all that to say that for me, my first filter is that you have to, and I'm being generous, but it's at least 40% silver
Okay.
content by for that company. And if to get to the 40, or if beyond the 40, the next sort of there's sufficient gold component, then I'm automatically more favorable to that company versus one where it might be copper or lead or
Lesser
zinc that starts
metals.
to make
Okay.
up some of the balance, because it's more of a precious metal. So for that reason.
It's challenging to navigate. You have to sidestep the potential Bre-X's. It sounds
Oh,
like
sure.
it's bringing back memories of that
You bet.
story. People haven't heard about Bre-X. They should
Yeah,
definitely look it up. There's probably a movie made or two about the
it
story.
should be.
Is there a silver like stock market darling right now, Peter?
Wow. That's a good question. Um, I wouldn't say that there is,
Yeah.
frankly. There's nobody that really stands out that way that everyone is sort of piling into.
So there's no like constellation software equivalent, right?
No,
Okay.
there's nothing like a magnificent one in the silver space, right? No, there's a lot of great companies, but I can't say there's sort of one real standout. Um, all there is that you've got some that are performing really well versus others. Sometimes it's merited, sometimes it's not. Sometimes it's just kind of,
Speculation,
yeah,
maybe, right? Yeah.
absolutely, being in the right
Yeah.
place, or having a really outstanding drill result that's like bonanza drill grades, that kind of thing. But no, I can't say that right now there's one sort of big name that stands out.
Is there a fund or a mutual fund or a private investor who you'd follow, and then you say, you know what, like their picks are pretty good. They've had a good track record.
Yes.
Is there anyone like okay? And
Yeah,
who
so
would you
so
recommend?
we're gonna be back to again Sprott.
Sprott. Is almost
Sprott
Sprott. Okay.
is
All right.
Sprott
He's the
is
wizard of
Yeah,
commodities, right?
and
Precious
I've got to
metals.
say, I think he'll tell you himself
Yeah.
that he's one of the biggest silver bulls out there. In
Yeah.
fact, it's funny enough. I was at a conference in New York, a silver conference back in October last year,
Yeah.
and there was a guy there who works with Eric Sprott, almost I guess on a daily basis. And I went up and introduced myself, and I said, hey Connor, I wanted to, shake hands and say hi, and I know you work with Eric, and I said I'd like to send you a couple of copies of my book. I figured,
Oh, good on you.
he said,
Yeah.
oh, we have that long time ago. We've we've
Oh, isn't that great? That is
absolutely. I
so
was,
awesome.
yeah,
Hearing that your hero has already read it, there's
you
several
bet.
copies on the bookshelf. That's
Exactly.
awesome. That's
Exactly.
really,
So yeah, if you follow what Eric is doing in the
yeah,
silver space,
that's
that is a
interesting.
great clue to who may be, outperforming. There's another guy by the name Michael Gentile.
Okay.
He's out of Montreal, and
Hmm.
many are starting to kind of see him as maybe a future Eric Sprott. This
Interesting.
guy ran a mutual fund up until a few years ago, was very successful at it, has
Okay.
now somewhat been focusing in the last few years back. He's kind of gone off on his own with new partners, and
Okay.
has one fund that is resource specific, and he's just really smart and very sharp, and seems to have sort of this magic touch to
Mm.
pick companies that have huge potential, and really start to flourish and do really well. He's on the board of some of these companies, or he's sometimes the largest
Oh,
shareholder.
yeah.
So he's a name, Michael Gentile, that is someone that your viewers may want to look out for.
Absolutely. I've never heard the name, so I always have to look them up. And being a successful private investor in these silver mining companies, you have to show up to the mining site too.
That's right.
Have you ever seen a mining production? Have you ever made the visit?
So I've been lucky enough to go to a few mining sites for sure. One in Mexico. There was actually one in it was I believe in South Carolina several years back, and a couple of years ago I was at there's actually a mint
Okay.
in or I'm not sure if you'd call it a mint, but I guess in a way, yes, in the Las Vegas area. And
Okay.
these guys do huge volumes. It was really quite the eye opener to see the operation that they had
Yeah.
set up. They produce blanks that go out to mints around the world. They produce some of the actual coins for some smaller mints around the world. It's impressive to see how these operations work, and people, like I guess any industry, but you don't fully grasp what it takes to make something like this run. It's a true sort of sector of its own.
And where's most of the silver mined? I think Mexico
Yes.
is it the top producer
It
now?
is. It's,
Okay.
I think 170 million ounces a year
Oh,
comes out of
wow.
Mexico. So we're talking, 17 to 20% of all the silver comes from Mexico. number two and three that are who are arguably on an even keel are Peru and China as numbers
Okay.
two and three, and then it drops off pretty quickly after that. But if you look at where the silver comes from around the world, you just have to look at a map.
Yeah.
And I'm going to say, if you look at sort of the west coast of the Americas, all the way down from Alaska, way, way, way down to like Chile and Argentina, it's all along sort of the where you've got these mountain ranges, the Sierra Madres, the Rockies. I'm not sure what. I guess it's the Andes further down south in South America. It's all along the west. That's where a lot of the world's silver comes from. And then beyond that, you do have some fairly sizable deposits in places like Australia. You actually have quite a bit of silver production out of places like Poland and Russia.
Okay.
Surprisingly,
Yeah.
there's quite a bit, or it's very concentrated, but there's actually some relatively sizable production coming out of Morocco, of all places.
Interesting.
So that's where you find most of the silver being mined these days.
And Canada has not come up
So yes,
in that
actually,
list.
Canada is a producer,
Okay.
not a huge one. It doesn't
Yeah.
really compete a lot with the sort of the bigger guys, but I will say that a fair bit of what we produce is really sort of from high grade mines. So that's pretty interesting. That
Yep.
a lot of silver coming from Canada is very silver rich type mines.
Interesting. So is that a consideration for an investor, like where the silver is from? Is there a premium placed?
I would say that you if you're going to be a bit diversified in investing in silver miners, you're going to have you don't have to, but you're gonna likely have some exposure to Mexico. It's almost
Yeah, it's inevitable, right? 20% of the market.
Yeah, for
Yeah.
sure. And then from there, the U.S., the western sort of
Yeah.
coast of the U.S., places like Idaho, Nevada, some California, places like that will have silver, maybe even a little bit of Texas, New Mexico, but the big ones are Nevada and Idaho. And then from there, again, like I say, it's the west coast of Mexico is where you really find most of the silver. And then, Chile, Peru, to some extent, Bolivia, Colombia, a lot of these places have really sort of rich silver mines as well. So the whole sort of, I guess, geopolitical aspect, jurisdictional aspect of silver mining is something that is something to consider as well, because some of these places are more or less stable than others. Some companies are better at navigating the geopolitics in those countries. So these are the kinds of things that I spend my time researching to obviously mitigate risk. And again, you don't want to put everything into a single mining company, and even less if you're going into the junior explorers that are much higher risk. You're going to want to spread that over at least 5 to maybe 10 names and just put sort of smaller amounts into each.
Yeah. So with the new generation growing up on cryptocurrency, Bitcoin being the new gold, Ethereum being the new silver, do you see, like, in 30 years' time, both can coexist? The precious metals, the cryptocurrencies I just named as a hedge against inflation and the debasement of the dollar, or what do you think? What's your
Yeah,
prediction?
I think so. I mean, I think what we're going to see too is, I think that what we will see is a marrying of the two, which is going to make the precious metals more accessible, more palatable to the younger generation. About 2 or 2.5 years ago, I remember there was at one point I remember reading this statistic, and it was that the two largest physically backed gold-backed cryptos had $1 billion worth of assets between them. And so, that struck me, and I said to myself, it's still very sort of early days, but I think that to me that was a sign that the younger generation that obviously has a comfort level with crypto likes to be able to go on their phones and maybe buy, if they're interested in gold and silver, they want to have the convenience and the ease along with the safety. So, but they want to be able to go on their phones, go on to, one of these exchanges and say, I'm going to buy this coin or that coin that is physically backed with gold or silver. And that's my sort of segue into the precious metals market. So I think that they're going to coexist in that form in the future, and I think that that's going to allow to introduce the metals to a lot of the younger generation.
It's almost ironic, isn't it? Because that is an argument against crypto. It's like there's nothing backing it. There's no assets.
Right.
It's not a business, so people are naturally looking for, okay, so maybe gold and silver can back it. That's quite interesting. Let's talk about the book.
Sure.
So the book came out, I believe you said, a few years ago. You can buy it on Amazon.ca. The Great Silver Bull. I'm a fellow author as well. I've got to ask Peter, what was the most challenging aspects of writing the book?
Well, I'm going to say that it was the time. I mean, it
Yeah.
was just brutal. I like to sort of joke that I'm glad I didn't know what I was getting into because I would have never done it. And it's funny,
It takes up so much time.
it's just I think people do not realize. This was a COVID project for me. And I remember thinking, and it was a former colleague who kept sort of egging me on and saying, Peter, you need to do this, you need to do this. And so this was probably like March of 2021. We were a full year into COVID.
Yep.
And I remember thinking, look, you know what? I'm not going anywhere. There's nothing to do. We're home all the time, evenings, weekends, no one's socializing, nothing's happening. Why am I going to let this pandemic go to waste? Let me, buckle down and maybe it's time for me to do this. And so this is kind of how it happened for me. I said, it's maybe now or never. So I thought to myself, okay, if I'm going to do this, what happened was, the sort of almost a day, I'm going to say almost the 4 to 5 years prior, I had been working with a group with this newsletter that I had been publishing in resources, and I had been focusing a lot on writing daily, sort of weekly posts for them on gold and silver, things going on in the gold and silver markets. And so that was a great sort of initial chunk of research that I had that I could fall back on. And it made me feel comfortable that I had, a lot of this knowledge and research that I said, I can use a lot of that in the book to cover sort of the different areas that I want to talk about as I go through the different chapters.
Yep.
And so that helped me as sort of getting over that first.
It was a good foundation, right? I know that Howard Marks, when he wrote his book, he drew upon all those newsletter issues that he's written for years. Yeah.
Exactly. So that's a parallel. It's a perfect parallel. And then I said, the next thing was that I said, okay, so if I'm doing this, what do I want to cover? Like, what are the things I think people need to know about silver and the silver market and investing in silver that I have to talk about in this book? And so, believe it or not, it took me, I'm going to say at most a week. Most of it was like in a day or two. I put down all these points that were essentially the outline. And Robin, I kid you not, I hardly moved anything around. It must have just been sitting up here for years.
Yeah.
When you know a market, and then it just came out. And I said,
great.
okay, this is what I want to talk about. And I hardly even shifted things around. And I stuck almost exactly to that outline the entire time. And really what it meant was, and it's funny because I don't really work that way now, but thank goodness I did.
It was a passion project, right?
Right.
It was just, you're so driven, focused.
Yeah, exactly. It was the skeleton, it was the outline. And I said, great. Now what I need to do is I need to go and fill in all these blanks. I need to go to each of these topics and either I have the info or I need to research it and write it out. And that was the part that I didn't realize how much work it was going to be. And again, it was a good thing that I didn't realize because we probably wouldn't be talking about the book today. But I'm really glad I did it. It's been phenomenal for me. So and I get really great feedback. And something that I did was I had two goals. So I said to myself, I want this to be educational. I don't want this to be like academic. I want people to be able to pick this up and say, geez, this is like a great, easy read as an introduction to silver and the great generational opportunity that silver offers us now. And what do I do about it? First of all, why? So that they get it. They get why you'd want to invest in silver. And then two, how and why, sort of why and how you're going to go ahead and start making silver investments. And that doesn't have to be anything beyond physical silver if that's what you're comfortable with. But if you want to go farther and do sort of silver ETFs or silver mining companies, then I go into some of those details as well in terms of how you build a portfolio and what you look for. And so yeah, I mean, it's almost a reference guide. I've been told by
That's awesome.
some fund managers even that have read the book and said, this is like my reference guide. And I tell people, hey, you want to know about silver, just read this, and this tells you everything you're going to want to know. This is your ideal introduction. So it's been great.
Congratulations. Yeah, time is the biggest challenge. Now, I'm curious, in researching and filling in everything for the book, you've had 20 plus years as an expert on silver. You had the newsletters, but what was something that you uncovered that you had never known before about the silver market? Like, I'm sure there's one aspect of something where you thought, wow, or story or some part of history you didn't know.
Yeah, I'm gonna say it's funny because I've been watching some of this stuff actually in terms of it's a quote unquote Game of Thrones, but it's more it's I'm actually watching this in French right now,
Okay.
and it's just sort of a series that talks about what happened in the late 1700s in France in particular when they went through the revolution, and you had all this pressure from different countries in Europe. And in the book, I talk about what happened a little bit. And it's interesting, we talked about at the beginning of this interview about, the importance of silver and the history of silver. Well, what happened was, I forget which number. It's Louis the 15th or 16th or actually maybe 14th or something like that back then. This would have been in sort of the early 1700s or so. These guys, these kings, they go around and they live high, and they actually went at the time and borrowed on the national treasury, and went and built all these elaborate castles all around France, and essentially they went bankrupt because they were at a point where they couldn't even pay the interest anymore on their loans. So lo and behold, this economist from Scotland, John Law, shows up. He actually escaped from Scotland because he had killed someone in a duel. And I'm not kidding, you can look this up. So he takes off, ends up in Paris, and he meets up with it's actually the son of the king, the son had been made king, but he was like 7 years old or something, so he couldn't obviously act as king. Someone was appointed what they call regent to manage things for him. And so this guy John Law shows up. He's an economist, and he's going to save the day, right? So he's telling them, look, the problem that you have right now is very easy to solve. All you need to do is increase the money that you have in circulation. Just go print money. So he sold them on this idea. And he said, what we're going to do, get this, is we're going to establish a central bank. And the central bank is going to tell people that they can deposit their gold and silver with us, and in exchange we'll give them this paper money where they can come back anytime that they want, and they can, we'll hold it safely for them. They can come back anytime they want, and they give us that paper money, and we'll give them back the gold and silver in exchange. So it worked at the beginning. So that's what they did, and the economy took off. Oh, he looked like a genius. Everything was fantastic, and then it wasn't, people started to realize that they were printing more than they had gold and silver to back in terms of the money that they had circulating. So here you have what you talked about is your fractional reserve banking. That's sort of the start of it. So this goes on for a while, and at the same time you had the Mississippi land bubble, which was so the southern U.S. at the time.
Owned by the French
Owned
still,
by the
right, at the
French.
time?
Exactly.
Okay.
So this part of history comes into it. It's all happening at the same time. So the French are looking on at the rest of Europe, like the Dutch and the British, and they've got the East Indies, and they've got these different or Asia. They've got these places where they get spices and all these riches, and they're making a ton of money off of these things, and they're basically jealous.
Yeah.
So they're saying,
Mississippi's not producing anything.
this is basically swampland, right? You're not getting anything out of it. But Law has another great idea, and he says, allow me to create a corporation and have exclusive rights to deal with the Mississippi Land Company. So the regent or whatever who's running everything for France says, okay, gives him the okay. And he creates the Mississippi Company and starts to sell shares. And so kind of like the tulip thing back in Holland, right? So, people get excited, the shares go up in value, and then they keep printing more shares, and at some point the shares fall. And so what he does is he starts printing more money from the central bank so that people have more money to go out and buying more shares. Well, of course, you can imagine what happened. The whole thing eventually blows up. And it basically collapses, which is what you would expect to happen. That's
Exactly.
the end of the story. But anyone who had held on to their physical gold and silver through all of that absolutely made out just fine, had no problem with daily living expenses, and didn't get sort of taken in by these two massive mania events that took place. And frankly, you have to wonder if it's maybe it's a generation or two later that you had the revolution in France, but the taste that people had from this debasement of the currency, you'd have to wonder if this just didn't feed into it. And they obviously saw what had just happened in the U.S. Just
Yes.
prior, so there was a lot of going on that fed, I think, into that revolution. But the story is, hang on to that physical gold and silver, and it ends up saving the day.
That is so interesting. Yeah, it almost bit the French in the butt, right, by helping to finance Ben Franklin and the rest of the founding fathers to to take back America from the British. That's really interesting, and it's a lesson that thanks for sharing that. I had no idea that applied then, and it applies now too, right? It's hang on to that real currency, hang on to whatever can hedge against debasement. That's inevitable. This has been a lot of fun, Peter. I really appreciate you taking the time. Thank you. And everyone should go grab the book on Amazon. Again, that's the Great Silver Bull, and learn a little bit more about silver and maybe consider adding it to your portfolio. So thanks again.
Robin, it's been a pleasure, and thanks to you. I really enjoyed our chat.
Cheers.